Welcome to the financial frontier, where we decode the mysteries of the stock market. Today's puzzle, the American Express stock. With a year-to-date gain of 7% and a trading price that's 13% below its fair value estimate, it's a tantalizing prospect for investors. But beyond the numbers, we're going to explore key factors that could influence its potential. From the company's dividend strategy to its business moat, and even the role of artificial intelligence in its operations. Strap in, folks, we're about to delve into the depths of the American Express stock. American Express, trading as AXP, is currently on the market for $158 per share. Having gained 7% year-to-date, it's certainly been a noteworthy player in the financial sector. Despite this impressive run, it's still trading 13% below its fair value estimate of $182. In the financial world, we often talk about the Sharpe ratio, a measure of risk-adjusted returns. Since early 2017, AXP has had a Sharpe ratio of 0.5, slightly lower than the S&P 500's ratio of 0.6. Looking at the company's second quarter of 2023, American Express reported total revenues of $15.05 billion, a 12% increase year-over-year. Furthermore, net income rose by 11% year-over-year to $2.17 billion. In the first half of fiscal year 2023, American Express top line grew by an impressive 17% year-over-year to $29.34 billion. Moving forward, estimates project the company's revenues to reach $60.75 billion in fiscal year 2023, with adjusted net income around $7.96 billion. But the question remains, is AXP a good buy at this price? AXP isn't just a credit card company, they're investing heavily in artificial intelligence. Now this might make you wonder, why would a credit card company be interested in AI? Well, let's dive into that. A recent survey by American Express has shed some light on this. It revealed that a staggering 41% of small businesses are prioritizing the use of AI to aid decision-making. Yes, you heard that right. Nearly half of small businesses are turning to AI for help. But that's not all. 39% of respondents are using AI tools to save time, and 20% are leveraging AI for customer service efficiency. It's clear that AI is no longer just a buzzword. It's a tool that businesses of all sizes are finding increasingly valuable. Now let's talk about a fascinating generational divide that the survey uncovered. It turns out that 56% of small businesses run by Gen Zers and Millennials are prioritizing AI, compared to just 24% among older generations. This suggests that as younger generations take the reins, the demand for AI could surge even further. So, what does this mean for American Express? Well, this spike in AI curiosity could translate into a significant boost for companies like AXP, who are at the forefront of AI integration. It could lead to gains in the stock market, as we've seen with companies like Nvidia. However, as with any investment, there are risks involved. The rapid rise in AI-related stocks has left some investors feeling jittery, and they're considering reducing their investments to mitigate risk. So, the big question is, will AI be the game changer for AXP? Well, only time will tell. But one thing's for sure, with the growing interest in AI among businesses, the potential for growth is certainly there. Credit cards are AXP's bread and butter. But how do they stack up against the competition? Let's dive into the features and benefits of American Express cards and see how they compare to other credit card giants. American Express is known for its premium credit card offerings with cards that cater to every lifestyle and spending habit. For instance, the Delta SkyMiles Gold American Express card is a frequent flyer's dream. It offers perks like free checked bags and priority boarding, not to mention the miles you accumulate with every purchase. On the other end of the spectrum, we have the Hilton Honors American Express Aspire card. This card is a boon for loyal Hilton travelers with benefits such as complimentary diamond status, annual free weekend night rewards, and a whopping 14 times the points on eligible Hilton purchases. But it's not just about the travel perks. American Express also offers solid cashback rewards and intro APR periods, making their cards attractive to the everyday spender as well. Their cards are known for their generous reward structure, providing value for money and an added incentive to use their cards for everyday purchases. But how does this compare to the competition? Well, cards like the Chase Freedom Unlimited are also recommended for their rewards and intro APR. Similarly, the Wells Fargo Active Cash Card is praised for its straightforward reward structure and intro bonus offer. However, where American Express truly shines is in its focus on customer service and user experience. Consistently rated high in customer satisfaction surveys, American Express has been able to carve out a niche for itself as a customer-centric company, thus creating a strong business moat. In conclusion, while American Express may have stiff competition in the credit card market, their robust offerings, coupled with a strong focus on customer service, make them a force to be reckoned with. AXP's credit card offerings are robust, but will they be enough to propel the stock forward? Stay tuned as we delve into more factors that could influence the future of American Express stock. Warren Buffett, the Oracle of Omaha, is known for his strategic investments. Could American Express be on his radar? Buffett is no stranger to the world of finance, and his strategy has always been to invest in undervalued, high-quality businesses. He's the master of spotting diamonds in the rough, of seeing potential where others see uncertainty. Now let's consider American Express. It's a company with a rich history, a strong business model, and a track record of solid performance. Its stock price may be trading below its fair value estimate, but that doesn't mean it's a weak company. In fact, it could mean the opposite. It could be a golden opportunity for those who know where to look. And who better to recognize such an opportunity than Warren Buffett? He's made a career out of capitalizing on market chaos, turning perceived weakness into strength. If Buffett were to consider American Express, it would likely be because he sees something others don't. He sees a company that's weathered economic storms, that's innovating with AI, that's servicing a diverse customer base with a variety of credit card offerings. He sees an undervalued company with high-quality offerings. But remember, even if Buffett were to invest in American Express, it doesn't mean it's the right move for everyone. Investment decisions should always be based on individual financial goals and risk tolerance. But it's worth considering this. If American Express is good enough for Buffett, should it be good enough for you? We've explored the terrain. Now it's time to answer the big question. Is AXP a good buy right now? Let's take a moment to reflect on what we've uncovered. American Express has shown steady growth with its shares gaining 7% year-to-date. The company's stock is currently trading at around $158 per share, a sum that is 13% below its fair value estimate of $182. The company's revenues have been on an upward trajectory. In the first half of 2023, the top line grew by 17% year-over-year to nearly $30 billion. This momentum is expected to continue, with projected revenues of over $60 billion by the end of the fiscal year. A significant trend to note is the company's investment in artificial intelligence. With 41% of small businesses prioritizing this technology, American Express is positioning itself to be at the forefront of this movement. This could potentially fuel further growth and stability for the company. In the credit card landscape, American Express is making compelling offers, catering to various customer segments, from frequent flyers to students. The company's diverse portfolio of credit cards is designed to attract and retain a broad base of customers, a strategy that could enhance its business moat in the long run. And let's not forget the Oracle of Omaha, Warren Buffett. Known for his knack for picking undervalued stocks, his interest in a company is often seen as a positive signal. While we can't predict his moves, it's worthwhile to consider his investment approach. So, considering all these factors, American Express seems to be a solid contender for your investment portfolio, but as always, the decision ultimately rests with you. The projected valuation of $182 per share is an enticing prospect, but it's essential to balance this with your own risk tolerance and investment strategy. Whether you decide to invest in AXP or not, remember, the stock market is a jungle, and every investment decision should be made with careful consideration. Until next time, keep exploring.